Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Jaden Sterling is the visionary founder and CEO of Sterling Stock Picker, an award-winning platform that is flipping the script on traditional investing. With a background that includes time at major financial institutions like Merrill Lynch and Citigroup, Jaden took everything he learned and did something radically different. He built a software platform that prioritizes transparency, education, and real results for regular people, not just the financial elite. Under Jaden's leadership, Sterling Stock Picker has become a powerhouse of data-driven stock analysis, featuring AI-powered recommendations, real-time performance tracking, and a curated list of over 60,000 companies. Jaden isn't your typical finance guy. He's a former Wall Street executive who walked away from the big firms to pursue something more meaningful, empowering everyday people to take control of their financial future. Jaden, welcome to the podcast.
Hey, Corey, thanks so much for that kind introduction. I'm happy to be here.
Well, I'm really interested to have you on from so many aspects, including the fact that it's very different. But, one of the big things that we do is to actually take wealth management teams out of the big players, out of Merrill Lynch and Morgan Stanley and UBS and Goldman Sachs, ICO and Wells Fargo, whatever, and have them become their own independent registered investment advisors who have fiduciary obligations to clients and we think is, better serve clients. You left the big guys, but in a software direction to really democratize this ability, to folks. So it's a different angle on it. But before we get to all that, and then some of the deals you've done related to this venture and otherwise, I want to take you back to when you were a little kid growing up, maybe 10, 12 years old. What did you want to be? Because I am pretty sure that a stock picking tech founder was probably not it. Maybe even your big firm experience wasn't the realm of your thoughts at 8, 10, or 12 years old. But maybe I'm wrong. You tell me.
Well, I was always interested in personal development. In fact, that's the time when I found a book called The Seeds of Greatness by Dennis Waitley. And he's passed, unfortunately, recently here. But that was a book that I came across at age 10, and it intrigued me. I thought, man, that's fascinating. From there, it went to reading books by Zig Ziglar and other authors that really indicated that we could create the life that we want to create. And so I carefully considered that. I thought about it. I thought, yeah, that makes a lot of sense to me. And then a big event happened when I turned 14. I had an epiphany. Have you ever had this, Corey, where time stands still and something just drops in, like you just know, you feel it in your bones, right? So I had this experience where I was in my mother's townhome and I came down the stairs and on her dining room table was this big boombox. Remember back in the day, the big boombox? And it was a cassette, actually, and it was Wayne Dyer speaking. And I found myself transfixed, like I'm standing in front of this thing and I just couldn't move. And what was strange is it was playing, but no one else was in the house. I don't know how all that happened, but anyway, I didn't question it. I just stood there. And then in that next few moments, I knew 3 things very clearly. And the first thing was I was told that I would be speaking on stages around the world around the topic of money. And the second thing I was told was that I would be teaching people how to be empowered by money, not enslaved by it. And the third thing was I'd be teaching from personal experience, not from a book I read or course that I took. Can you imagine, like, at a young age, your whole life purpose is downloaded to you, and I followed it. I trusted it. It's why I went to school at, American University, studied finance. And after that, worked on Wall Street. And so, yes, at that young age, I was geared toward doing exactly what I'm doing today.
That's wild. So you were 14, you said, with the Wayne Dyer experience. I am a huge Wayne Dyer fan. Obviously, it's been a little while now. It's amazing.
Yeah.
But his books and his programs, all the PBS specials, whatever. I mean, yeah, no, one of my very huge influences out of a bunch, because I'm also personal growth, spiritual
Mhm.
growth guy. But that's amazing that even leading up to that, the other stuff you were reading at younger than 14. I mean, I was much older before I got into those conversations. So that's amazing. And just to have that maturity is the right word, just maybe connection or whatever it is, just to know that's your purpose and that's your truth at that young age is really phenomenal.
For me, it's been really helpful because I've never had to guess, what do I want to be when I grow up? What am I going to do? Like, I've just followed this thing to a T. And it wasn't always that way. Like, I was kind of going down the wrong path as a kid. I got involved in the wrong group of friends and was experimenting with marijuana and stuff like that at a young age. It was my mom who saw me just kind of going off the rails there. And she said, "Hey, why don't you read this book?" And it was The Seeds of Greatness. And it just turned everything around for me. So, regardless of, where, if you think you can't get out of something or breaking free of something, like, you really can, just requires some effort. And so, yeah, that book saved my life. I've since talked to Dennis Waitley and mentioned that to him, that it helped me get back on track in life, and it just set the trajectory and absolutely changed my life. When I say that I think the power of, the mindset and belief systems is key in life, I live it, breathe it, believe it 100%.
Well, listen, my listeners on this podcast will know that I talk about mindset a lot. So that's another place that we're aligned. One more question looking back, which is, what was your first deal of any type? Could be early in your career, maybe it was younger when you were a kid. Anything you consider a deal?
The first deal I ever did, I was probably like maybe 11 or 12, and I had this Brownie Bullet camera. And I remember to this day, I sold it for $25, and it was a deal. And I felt like it was like the first deal I'd ever done, where I had something of value that someone else wanted. And there was this back and forth of, what do I want for it? But most importantly, what are they willing to pay for it? And then the analysis that my dad helped me walk through, when he said, once you sell that camera for what you think it's worth, it's gone.
Yeah.
So if you want to replace that camera, you're going to have to go out and buy it for what it's worth in the market at that time. And it could be more or it could be less. And I really listened to that, took that to heart. And that has always stuck with me when I've done any deal, looking at, what am I selling? What price am I selling it for? But it also shaped my ability to understand that making money in deals is on the buy side, not the sell side.
Mm. Yeah, I love that, because sales trainers, sales coaches, people like that, sales people, we don't have them on because we look at that as organic growth and we talk about the inorganic growth side. But there's often lessons that deal makers glean from their first deals, quote unquote, are sales. And then, yeah, I mean, I know we'll get into, I know you did some real estate investment, whatever, and that whole conversation of making it on the buy and not, and not the sell, like, applies to a purchase and sale deal on real estate. So I love when we follow those lessons through and see those threads. And I also love, like, that conversation with your father, because now this becomes much more of a analysis of just not feeling, oh, okay, yeah, I like having that $25, right? It's like, oh, wait a second, well, let's think ahead, which is another important things in deal making, right? To try to look at the future of what might happen, opportunity costs, replacement costs, all of that stuff are great deal concepts. So that's a lot of fun.
Yeah, I mean, it's like, even looking back, I've even done the mental exercise of looking back and thinking, if I had saved 5% from every paycheck I've ever received in my
Sure.
every deal I've ever done, we'd all be multimillionaires, right? Like, just from that savings alone and investing in that. So it just kind of reminds us, like, when we're doing certain things, to really, if you have 10 apples, hold one back.
I had fortunate enough to as a friend and a client, David Bach, who wrote Automatic Millionaire and Smart Women Finish Rich and Latte Factor most recently, and 8 New York Times bestsellers, an amazing financial guy. Like, I look back and he talks about his grandma Rose, and Grandma Rose was the one who introduced him to stocks and bought him his first share of stock. And that was the kickoff when he was like young, like very young, right? The ages we're talking about back, and I didn't have that. And listen, I don't blame anybody. When I was growing up, it was lower middle class. It was paycheck to paycheck, right? We weren't poor. There was always food on the table and the lights stayed on, but there was no money to invest. There was no money we didn't take vacations. We didn't go out. Later, my parents became more comfortable and moved from the low middle class to the upper middle class. And my dad actually got very into investing and never had an advisor. He did it all himself. He read every mutual fund, every publication, and he was totally into it. But that was when I was adult already. I'm not somebody who looks back and regrets it. All got me to where, and I'm going to be more than fine, so it's okay. I was making good money as a lawyer in my 20s, spending more than I was making. I was in 401k. Who knew what that was? It was like, so I look back at the folks who got exposure early, had Grandma Rose or whoever it was for them, like David did, and just the concept of compounding returns, right, is so powerful.
Yeah, I mean, it's a really good point. And I think, too, another really powerful concept is delayed gratification. Like, I remember when I was at a firm and I was being hired away from that firm by a bigger firm, and they were saying to me, look, we're happy to pay you cash and stock. They told me about this stock purchase program that they had, and I'd get it at a discount. And I said, well, how about this? What if you roll that cash that you want to pay me now into that stock? And I'll just be a part of that stock purchase program with that money. And they said, sure, we can do that. So it was like 1992, and it was 70,000. I'll never forget it. It was $70,000 that they rolled into the stock for me. And the stock during the 90s tripled, and that 70,000, and I contributed to it on a regular basis. And they did some matching. So that 70 grand grew to just under $1 million. It was phenomenal. Like, one of the best experiences I've ever had with money, but it started out because I delayed the gratification. I said to them, I don't need the cash. I mean, I was making good money then, and things were simple, just easy. And that was one of my second biggest lesson too, is the more we can delay gratification and put money to work, like, just don't even touch it now. You don't need that new iPhone 17, 23, 80, whatever they have going, like keep your old iPhone and invest that money. And I think that has served me probably the most, because then I could take a real asset. So in the year 2000, my account was worth over $1 million in that stock. And then I could take that asset and parlay it into real estate. I allowed for the basis to help me grow to actually 10 times that amount over a 7-year period. So it was helpful for me, and I didn't live large during that time, although I was making multi-millions of dollars during that time doing deals, real estate deals. But it allowed me to go to the next bigger deal and, doing those tax-free exchanges. So I think that as our audience is, getting into deal making, and this is a deal making show, I think it's important to recognize, like, scale back the short-term returns that you want to see and defer into investments that are going to give you longer growth. And, it's great to double your money, but when you 10 times your money, that's a whole different situation.
Yeah, and it's really interesting because they've done studies with kids, on this delayed gratification conversation where they give them like one piece of candy, a cookie, or whatever, and they say, okay, if you don't eat this for the next 5 minutes, we'll give you two cookies later. And they have ones that they've done more recently, but they have ones they did a while ago, and there is developing some really clear evidence that the kids who are willing to delay gratification are more successful going forward.
Absolutely. I've heard of that study too, and you're absolutely right. That is the case for sure.
All right, so let's talk about this real estate. Put in time again where you started focusing on real estate, and talk to us about something you mentioned. You alluded quickly to 1031 exchanges. Talk to us a little bit about that journey in real estate, and then we'll work our way towards the present.
Sure, happy to. My journey was shaped from when I was 18 years old. I had the opportunity to hear Zig Ziglar speak. And I went to his seminar, sat in the front row, and on bended knees, Zig said, if you help enough other people get what they want, you'll get what you want. And it just stuck with me like my entire life. And I kept thinking about that and thinking about that. So when I got out of the investment business, I looked around. It was early 2000, and I found this great little town in Florida that had zero quality affordable housing. Like the affordable housing was all relegated to South Side stuff and it was in bad shape and, it was just a mess. And I thought, what if I have a mission of creating quality affordable housing in this magnificent city and make it in the downtown space? So I carved out like a 2 square mile space in the downtown and really started going to work to buying properties. And I was brand new to this because I was a stock guy, now I'm going into real estate. I wanted to develop quality, affordable housing. And in that process, I had to get really creative because in commercial real estate, you have to come up with 20% down for the deal. And I'm looking at $1 million properties and wanting to buy multiple ones and then having the cash to redo them. So I would do things, I just got creative, man. I just got so creative. So I would do things like put my IRA up as collateral in order to close a deal with a bank. And I would say to them, hey, look, and I would buy properties that were in rough shape. This is back in the day when the big thing of, we buy ugly houses. Well, I had billboard that said I buy ugly apartment buildings. I used to get calls all the time like, okay, hey, I got this ugly apartment building. Do you want to take a look at it? I would go and look at it and quickly realized that I needed to hold some cash back to be able to do multiple deals. So I would do things like with the bank, I would say, okay, here, I got this IRA and it had a few 100,000, maybe 300,000 in it. And I said, I want to buy this 8-unit apartment building. It's right next to another building that I own. And I'm going to do, here's my list. I'm going to do all these capital improvements. I'm going to raise the rents because half the building was empty when I bought it. So it was easy to get the rent roll up. And I said, oh, and by the way, I'm going to need a construction loan. So the closing actually got money back on the deal because they rolled the construction loan into it. They took my IRA as collateral. I didn't have to put any cash down. 6 months later, we did all the work that we promised and I got my IRA back. So it worked out really, really well. But I had to be creative. I ended up doing 125 deals during my 7 years as a real estate guy. And so I got to hone my craft as I went from deal to deal to deal. I mean, I started out like Charlie Sheets or Carlton Sheets. He had that real estate course, right? Old school. And it had this little like wheel and you'd spin the wheel and it's like, okay, no money down means, you get to have cash to do more. Anyways, it was awesome. It helped me so much. It helped me hone. Like, I didn't even know what HVAC meant. I'd call on these things in the newspaper and be like, how's the HVAC? And they're like, oh, it's good. Oh, shoot. I still don't know what it means.
And it's really interesting to me because, you come out of finance, right? And I will tell you, there are many finance people, certainly the Dave Ramseys of the world, right? Just to pick one out is on the extreme of that, who would say, he's like, don't do debt on anything, right? And there's a big counter movement on that to be able to leverage. And trust me, I mean, when I started my law firm with no clients, less than 6 years out of school, I applied back then. They didn't cross-check so much. I applied for 5 new credit cards on top of the ones I had and paid my rent off, advances off credit cards, right? And I had $115,000 in credit card debt, which is also something that financial people will tell you is crazy to do. And you know what? It allowed me to launch a law firm that I'm running 35 years later and built into something significant, right? But it's interesting because like with your finance training and whatever, was there any voice in your head that said maybe I should, put up as collateral my retirement fund?
Corey, man, not only did I put up that Roth IRA as collateral, I had a third mortgage on my home at
On your
one
home.
point as collateral to do a deal. So, hey, look, I was full on in. I'm a burn the boats kind of guy. Like I
Yeah.
just go into it, I go after it. Would I do it differently today? Well, yeah, I'm, late 50s,
Won't
not
lose.
early 30s.
Right.
I mean, yeah, I would definitely recommend like more equity in on deals. I learned a lot through that process. And it's just one of those things that through the growing process of, honing in on one area, and I think that was the key for me in real estate. I focused on affordable housing, mixed use properties, apartment buildings, commercial. I did some single family, but for the most part, it was apartment buildings within a 2 square mile radius of a downtown area. And from that, I learned like, there's separate lenders that lend on affordable housing,
Yes.
that a regular commercial lender wouldn't have access to, or a
Yes.
commercial investor. And then I actually ended up doing deals with the city that I lived in because I met the head of the housing department right when I moved there. It was just one of those really odd, cool meetings to meet him at a baseball game. and told him, yeah, I'm new to the city and I want to, do some deals in affordable housing. And he said, well, come to my office Monday morning. The head of the affordable housing department. I'm like, I will be there. So ended up building a friendship with him, and every city has a huge budget for affordable housing. So
Yes. Yes.
I've always thought, again, the words of Zig rang true. You help enough other people get what they want, you'll get what you want. And then, as you said earlier, like every deal, then it led to a 1031 exchange to bigger property. And I mean, all these years later, like 20 years later, I'm still having the benefit of depreciation on my corporate balance sheet to help shield some income from taxes. That's been incredible, right? So there's just so many benefits to doing deals like that.
Love it. Did you go from the real estate investing directly into your current company?
What I did back in 2007, my twin brother was diagnosed with cancer. Basically, they told him, you've got 2 years to live, and that's that. And so during those 2 years, he and I had many heart to heart conversations. And one of those was, he always said, I don't feel like I lived my purpose. I don't feel like I knew what my purpose was. And when I heard that, I thought, oh man, I know what my purpose is, and I'm probably not living it. Like, I'm just building this real estate business, right? Like, I'm not out there teaching people how to be empowered by money. Like, everything that I was told at 14, I'm not doing.
Yeah.
So I said to him before he passed, I said, bro, I'm going to live my purpose for you and for me. So
Wow.
when he passed, that's when right away I transitioned to doing what I'm doing now, which is teaching people empowered by money, making good financial decisions, things like that.
It's so important. I mean, I talked a little bit about like not on this thing of stocks, and I like in the bio, and also like you said something early, the mindset conversation, some of these other comments. It's one thing to explain to somebody the power of compound returns, right, or early investing, or taking one of the 10 apples, right. Then there's also like the conversation of people's relationship to money is deep,
It is.
like really deep. In fact, I remember one of my mentors around money was Lynn Twist, who wrote The Soul of Money and has courses and stuff like that. This was at a time before she put out all those books and coursework and whatever. She was the head of strategic funding for the Hunger Project. She was basically the number one fundraiser for the Hunger Project. And Lynn, I remember talking about dating, you've been mentioning the boombox. There was a cassette tape of a radio interview she did at an NPR station that somebody had taped, and we duplicated and, and would hand it out to people. And it was her initial work around the soul of money before she turned it into a book and a course and whatever, just started thinking of it. And she talked a lot about money. She talked about money as spiritual energy, and you got to keep it flowing, or money like water. Like if you hold on to it, it festers and becomes disease. She talked about how people say what's important to them. You talk about being on your purpose, having impact, right, and making a difference for others. And come back to you. She said, not in a judgment way, but you can say all you want about what's important to you, but if you look at your bank account and your credit card statements and where your money's going, that's an indicator of what's really important to you. And not out of guilt, but you have an opportunity to put more of your money in the budget first, right? Most of us do impact stuff, or most people, like with what's left over, right? Oh, I have this much left for charity. And she would say, what if you put it in the budget first? What if you put more of your money towards your highest ideals? That impacted me. And then I can go on and on and on about her, because she was a very big influence on me, of a guy who grew up in a family where there was lower middle class. There was, money scarcity. My dad divided his paycheck in cash and envelopes for the rent, for the food, for whatever. And when it was gone, it was gone. And there were times when it was gone, right? Yes, have I had external knowledge based learning about money? The deeper work has been my relationship to money. And then the last thing I'll say about Lynn is she used to talk about, as a fundraiser in the beginning, she had no compassion. She used to go to these multimillionaires and billionaires and ask them for a $5,000 check for the Hunger Project, and they would say no. And in the beginning, she would have no compassion or empathy for them, because she'd be like, you got billions of dollars, you can't write a check. And what she realized was that doesn't matter how much money somebody has, they can have billions of dollars and still be living in scarcity or fear of losing it or whatever. And one of the things that really struck me is she said she became super successful at fundraising when she started having compassion for the rich. It was compassion for their humanity, and the fact that just because they had money doesn't mean they had a healthy relationship with it.
What I've learned, money mirrors your relationship with yourself.
Yeah.
And the healthier people have in terms of their relationship with self, the healthier the relationship with money. And I think it was Helen Keller who said, you can't go broke by giving. And that's always rung true for me. It's like it goes back to what Zig said, right? When you help enough other people get what they want, you'll get what you want. And it's like people ask me all the time, well, how do I get more money? And I said, well, then give it. You have to give what you want. And that's where most people get the disconnect. They don't understand that. They're like, wait a second, if I give it, I'll have less. I'm like, totally missed it. And you talk about money flow, money does mirror water very much. It mirrors all states of it, from ice frozen money to steam, steam powering engines, to steam powering your life and business, to helping you do deals, cash flow to, everything. And when people start to recognize, when they start to become more comfortable, like I heard this interview, it was fantastic. Real quick, this influencer was interviewing a billionaire. And the influencer, who was clearly not even a millionaire, says to him, well, so who funds your deals? And he says, banks. And he says, oh, okay, well, how do you negotiate with the banks? And the billionaire said, what? He said, I don't understand the question. And the guy said, well, what do you do? How do you beat him up? What do you say? He says, I don't do any of that. I make sure the banks make money off of me because I'm making money with the banks. And you could see this influencer's head just explode, right? Like, oh, okay. And a billionaire thinking, like, for me, that's next level. Like, I'm 100, 200 millionaire kind of guy. Like, that's my level where I'm kind of trapped at right now. And I'm ready to get to that next level. And the billion is just, to me, like, oh my gosh, that's like a whole new level of thinking, a whole new level of behaving, a whole new way of risk taking. It's just beyond where I'm at right now, but I'm certainly willing to get there.
Love it. Let's talk, we've sort of teased it a little bit in your bio. People have a high level idea of what you do and what your current company does now. But let's really get into it.
Yeah, happy to. So when my brother transitioned, that's when I got serious. Like, I just basically did an about face, changed how I went about things, and I started mentoring people on a more formal basis. I was doing it informally. Prior to that, I'd have people come to my office and I would teach them the things that I've known, and they would do nothing with it. Nothing. And that was because I wasn't charging for the information. I was just giving it for free, and people don't really value what they get for free. So I realized, oh, if I want to do something with this, I've got to start charging. So anyway, I created more of a formal teaching around it. And I started teaching a money mentor program that basically taught people about the truth of money and how to make money in investments, specifically stocks. So I would, bust money myths like diversification. Diversification is a big money myth. You don't need to diversify your assets. You need to be 100% focused and concentrated in your asset position. And so I would teach people these things. And from that, one of my students years ago, like 11 years ago, whatever, something like that, she said, I love what you're teaching me, but could you create software out of this? And I said, oh, well, I don't know. I'm not a software guy, but let me see what I can do. So another student of mine came to me 6 months later and said, hey, I'm a software developer and I've got a partner, and you got any projects? Are you working on anything that we could help with? And I said, well, funny that you asked. Yes, I do. And I said, if we could help novice investors find winning stocks in 2 clicks or less, we could really make an impact in the world. And that was 2017. And here we are 8 years later, still doing it, still making the software better and better. It's called Sterling Stock Picker is our software platform. And now we're just taking it to the next level. So currently we have 3,000 users in our platform. It's doing really well. It's getting results for people. It's changing people's lives, and it couldn't be any more fun.
Let me ask you a question, because you made a statement that is pretty bold and that a lot of my clients who are financial advisors would disagree with, which is about diversification, right?
Mhm.
And I will add, it's interesting because, and maybe I am a bit jaded on this. And by the way, I'm not just saying I disagree with you, but I'm talking about some experiences that lean towards. We had some clients decades ago when there were actually people trading on the floor of the New York Stock Exchange. And I almost sort of knew too much about that sausage and what goes on there, what went on there, less so now. It's electronic, it's whatever. But, front running tickets and that, all this stuff, right? And then I had a buddy who helped write, unfortunately, he's passed now too, but he helped write some of the early program trading systems for First Boston, UBS, and whatever. And those were like ancient compared to what the technology does now. And I'm like, but even back then, I was like, wait, John, you're telling me that there's a computer that trades not thousands or tens or even millions, but tens of millions or hundreds of millions of shares, right, per second based upon anomalies in the marketplace, right? And I'm like, between the insider trading, the shenanigans that go on Wall Street, and the computer, whatever, I can't compete in this game. It's actually why I actually started investing in real estate, because I said real estate's a lot less efficient and I can learn a market. You talked about it exactly, 2 blocks, whatever, right? I can learn a market and I can compete in there. And I'm going to take not that I'm not going to invest in the stock market, but I'm going to put that in a diversified portfolio because I can't compete against the inside information of the big boys. I'm going to go compete where I think I can, so I'm not challenging you. Like, I have limiting
Totally
beliefs,
get it.
whatever, but mainly because there's a lot of other people out there who would think that way. I want to give you an opportunity to say, hey, why you are counter common wisdom.
Let me clarify. Having your money in multiple asset classes is fantastic, like
Yeah.
real estate,
Yep.
stocks, business ownership,
Yep.
like that is epic. And you want that type of. The diversification you don't want is, well, Warren Buffett said it best. He said diversification is a tax people pay who don't know what they're doing. So when you look at a mutual fund that everyone has because the commissions are so high to sell them to people, you're looking at 150 to 200 different stocks in each mutual fund, approximately. And that is way too diversified. Like that type of approach will get someone only mediocre or average returns. It's why the average mutual fund does basically 8 to 10% a year, let's say, over a long period of time. But when you start to really focus in and hone in on what stocks are moving in the equity markets and buy large positions in those companies, you can start to create real wealth for yourself. Like I did in the decade of the 90s, one stock. One stock. That's all I bought. And that is the type of investing that I mean in order to make a difference in your wealth. You will never be wealthy buying mutual funds or counting on the industry to make you rich because they won't. They are focused on making money off of you, not for you. And hey, I still have lots of friends in the business. It's a hard pill to swallow. These guys are great. Great people. No question about it. And they're making a killer living and they love what they do and they're good for their clients. But the reality is the business, the industry is set up to make money off of clients, not for them. I only say that because I was in it for 11 years. I'm very familiar with being on the inside of the industry and how it's set up. I'm just saying what works. What worked was in the early 90s when my clients came into Merrill Lynch with 4 or 5, maybe 6 stocks in their portfolio. It was John Deere, IBM, the big companies back then. We were told, sell those positions and diversify them so out of risk, right? Oh, we don't want them to take any risk, oh no, God forbid. And so we had to buy package products and mutual funds and unit investment trusts and manage money, all that stuff. Well, the day you sit down and run the analysis of if my clients had just held that John Deere stock, how well would they have done versus all the other garbage that they purchased? That's where I'm coming from. Like, I'm not just singing a tune over here that is not well documented. I'm talking about investing in a way that will make real wealth. And the only way to do that is in focused, concentrated positions. Does that make sense?
It totally does. And listen, I love bringing on all different viewpoints, all different approaches. And listen, I will say, even in my example, the main reason why I have more diversification on stocks is because even though a lot of my clients are financial advisors, all this stuff, whatever, that's not where I spend my time. My dad used to sit in the bathroom with his, magazine, reading about different companies and analyzing the P&Ls and looking at what the investments were. Where I focus my time and very focused is building my business, right? That single asset, right? That has created most of my wealth, and making real estate investments where I feel like I can compete more. And it's just because I don't spend and I'm not called to be an expert over here. That's why I'll take my 8 or 10% over here because that's not where I am going to become more sophisticated and learn how to do better than that, right?
Yeah,
That's
and
just
what
my
your
choice.
father did would have been so time consuming And me too. When I would analyze a company to take a position in, it took sometimes days
Right.
to do that. And that's why we created the software. So now it's just a push of a button. It does all of the calculations from the technicals to the fundamentals to the financials of a company. And then it spits out what we call North Star rating. So a 5 North Star stock is beating the averages by 67% right now. So we're
Yes.
we're finding these gems of companies, and for someone, that's the leverage for people, is the software is the thing that will spit out the winning companies. You don't have to spend all those hours defining them.
So let's talk about a little bit how you funded this company in the early days.
Yeah, bootstrapped it, self-funded it, for invested over 1 million into it, and then we did a capital raise. I thought, to get this thing to the next level, let's get some people to join us. And we reached out to our user base, which at the time was like 200 users. It was a very small number, and 32 of those folks said yes, and we raised almost $1 million at that time, and we put all of that into the infrastructure of the software. And yeah, it's doing great. My goal is to get those original investors 10 times their investment.
That's interesting. And it's I love the fact that you went to your user base. And it's a conversation I have with clients. I mean, obviously, different businesses don't, but I always say, okay, yes, there's lenders out there, whether it's banks or other kind of lenders. There's angel investors, it's friends and family, there's angel investors, there's venture folks, right? More professional capital, family offices, all that kind of stuff. And then, of course, there's strategic investors. But so a lot of people focus in those areas, right? And one, there are so many businesses that either aren't appropriate or ripe or for any kind of professional capital, or it would be smarter for them to take that money later at a much better valuation for them than early, even if they could get it. And there's not always the right strategics out there, or you may not want to. And I think the overlooked area often is, what about your customers and clients? Another aspect of that would be sort of key industry players. Like, I had this conversation with folks, you have a supplier that's highly, you're a big part of their business. Okay, they could be. So what had you think about going to was it sort of like, oh, we're not ready for any of this other kind of capital, or I'd prefer not to have that kind of capital?
Bingo.
We have like evangelists, kind of, early adopters here. And like, what had you decide to go that route?
We looked at a few different routes to go. Although I will say one route I did not consider was banks or brokerage firms. I like you can already tell, I'm a total rebel in the
Yeah.
space, and I want to assist people to grow their wealth like individuals. So we looked at some different platforms like the crowdfunding platforms. And I thought, the ones who know us the best are our user base. Like, they've been working with the software for a couple of years now. We beta tested it for 18 months to make sure we really had something going there. And the results were incredible, what was happening for our user base. So it was an easy ask. Like, it was so simple to raise that capital. We raised it in 6 weeks, I think. Once we had all, the attorney draft all the paperwork and file with the SEC, it was a really quick raise. And
You just did a Reg D or a
yeah,
private placement?
did a
Yeah.
Reg D.
Yeah.
Yep. And so we've just stuck with that. We've never raised any. We're debt free. We will remain debt free. I'm a big believer in that for this SaaS company. And then we'll see. I think our exit strategy is to start trading on a tokenized exchange. So we'll tokenize their investment for them. Now we're a very different company than we were when we started. We have 3,000 users now versus a few hundred.
Sure.
So we're going to be able to reach out to our new user base and say, okay, this is what we're doing. This is our next step. And we're probably looking at an exit of within the next 5 years.
Well, love it. One of my commitments on this podcast is to, yes, always have a deal angle, always have that focus, but not just have a bunch of investment bankers coming on talking about valuation or whatever. Not that there's anything wrong. I love investment bankers. We have them on sometimes talking about valuation because that's an aspect of deal making. But I want folks, whether it is our newer folks to deal making or folks that are maybe very sophisticated, but a lot of sophisticated deal makers do one or two or whatever types of deals. And I always want to open up and want to talk about mindset shift. One of the things I talk about is, as a talk I give, that's not only like we all understand this difference in mindset between an employee and an entrepreneur, but what's a lot less talked about is the difference in mindset between an entrepreneur and a deal maker, right?
Yeah.
Like, so to have folks on that have different models, that have the trend, or that have, said, hey, maybe I can raise for my customers. Like, there is somebody in this audience who's thinking, wow, I didn't think about that. Like I have loyal, maybe that's where I can get capital. So I love having these different aspects and different viewpoints on. So I appreciate you bringing that. If people want to find out more about you and company, where should they go?
Thanks for asking. Sterling Silver. Sterlingstockpicker.com is where I live all the time, and I'm there. And yeah, they can find out. I think my bio's there, as well as information on how to join. I think we have a 30-day free trial for the software. But after that, we've done our best to keep the price very low. It's less than, I think it's $29 a month or so subscription. And then if they get the annual, they get 30% off of that. So really affordable for people. And yeah, I look forward to seeing folks there. I'm in there answering questions in our chat forum. We've developed an incredible community of investors at all level, like from newbies to advanced traders in the system. So it seems to be working for everyone.
Love it. My final question on the podcast is always about my highest value in life, which is freedom. And for me, that means everything from freedom around the world for people from oppression to why I've been an entrepreneur for decades and have had a boss. What does freedom mean to you, and how does it impact your life and business?
Freedom is also my number one core value. And to me, it means that at any time, I can choose to go anywhere in the world with anyone I want for as long as I want. To me, that's freedom.
Love it. Love it. Jaden Sterling, thanks for being such a great guest on the Deal Quest podcast.
I appreciate it. Thanks, Corey. Really enjoyed it.
Thank you for joining me on this episode of Deal Quest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to cupforlaw.com. That's cupforlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your Deal Quest will bring.